So what I was saying is, if I wanted to hold Tesla overnight and it's 174 and tends to move on average to 180, and I'm risking $1, well, that's a pretty good risk reward. I'm risking $1 and making possibly 5 or 6. So that's how I would use that to help me decide whether or not I wanted to get into this swing trade or to just hold a position overnight. The next grouping, I'm going to scroll over so we keep things clear, I made based on Ken's mechanical frog system. I didn't want to have to mark up all my charts because I have a lot of charts. I have a lot of screens that I try to keep track of. So I just went ahead and computed what the half frog and the full frog for both short and long candidates would be. If you can look into the formula here in the cell, I've just taken the open and added 1 standard deviation divided by 2, which is the half frog. It's half a standard deviation, and I added it to the open. The next column I simply subtracted it. Then I just created some conditional formatting if text contains to highlight short or long candidates. I put a little formula in there to tell me if the price is greater than this frog price or lower than the frog price, then it's a short candidate. If it's greater than, it's a long candidate. So I just did that for the frogs. For me, while I'm trading, I don't like to have to calculate a lot of things in my head, and I don't like to have to get out a calculator. I like to just be able to look at the data that I need so that I can quickly make a decision. I like to try to keep my focus on the charts. I'm not a strong visual person. I'm more of an auditory person, and so I try to reduce any distractions that will keep my eyes off the charts that I'm watching so that I can be sure to see the signals that I need to see. Now we get to gain stat and fail stat. They're all set up the same way. You basically have 30 days worth of statistical information, what the standard deviation was for those 30 days, the minimum, the average, the maximum move. There's also the range stat, which is the average plus 1 standard deviation. These are all from Ken. He's got them in his weekday and weekend reports. And when I saw them, I just wanted to create a spreadsheet where I could plug in any stock I was interested in and quickly get that information. So I actually use these in the morning. It's the same setup here, it's just configured with the price. The open plus the max, the open plus the standard deviation and average, the open with the average, and then the open with the minimum, what that would be in price. So at the open, I watch the stock take off, and if it goes up and I want to get in, the first thing I'm going to do is I'm going to look at these statistics right here. So for example, if Tesla was say up 184, I know from this information right here that that's a very high move and it might be running out. So I would consider it probably extended and not get in. I would be expecting it to start to make a fall. This is under normal circumstances, you know, not if there's any special news or earnings information or anything like that. I can also use it to consider maybe getting in on a short trade. So say maybe maybe Tesla's run up to 185 or 186, and now it's starting to hesitate. Well, I can use this information, say, oh well, normally it only goes to about 185, 86 before it starts to fall back. And so I can anticipate that it's going to start to fall and maybe start preparing a stop and reverse or a straight out short. Or I can use it as a caution not to get in, that I was late to the party and it's best to wait. The same thing's true for the pink, the fail stat right in here. You've got the figures, and then you've got what it would be in price. So I can quickly look at a chart, and if the stock was 176, I can look here in the range to try to figure out when's a good time to get in. Is it maybe getting to the bottom? Maybe I should prepare to go long. Maybe I shouldn't short. So for example, say Tesla has fallen from the open, and it's fallen to 175.50, and now it's starting to hesitate, kind of wobble a little bit. So I'm going to look at this chart or the spreadsheet that I've made, and I'm going to see right away that the average move would take it to 175. Well, it's already surpassed that. So I might be able to interpret that we're getting ready for a change. That perhaps the stock is getting ready to make a move up, and it might have reached its bottom. I could go a step further and say, well, once it rises from whatever low point it is, I could use one standard deviation or a half a standard deviation as a signal to enter. That's something that Ken has been doing lately on some of his trades, and it's really quite clever. It helps you filter out the noise and maybe get a sense of where a safe place to enter from a potential bottom is. After that, so the range stats for the gain stat and fail stat are all from the open, but the orange, which is the range stat, is the high to low range over 30 days. So over 30 days, the last 30 days, Tesla on average has moved 22.77 from the low, and an average of 670. A maximum rational move would be about 1083, and then the maximum move it's made over the last 30 days is $25+. The standard deviation for all this is around 413.